Hey there, welcome to Texas Legacy Vines Vineyard Block number 2 offering. I'm Keely Hubbard. I'm a managing partner for Texas Legacy Vines, and we're so glad that you're here. First, we got to start off with our disclaimer. There's a copy of this in the slide deck for you, but this is a 506c offering for accredited investors only. We have a ton of stuff to discuss. I'm so excited to share it with you. So let's dive right in. First, meet the sponsor team. Like I mentioned before, my name is Keely Hubbard. You'll see that there's somebody else with the same last name. That is my father, Tracy Hubbard, Mason Moreland on the other side, and his family. So it's basically two families that have come together. We are diehard Texans. I'm a 7th generation Texan. My dad's a 6th. Mason is a 5th generation Texan. We love wine, we love growing grapes, and we love the state of Texas. And we're so excited about this offering because of that. That's one of the reasons we named it Texas Legacy Vines. But in short, how we all came together. My father's got a lot of business experience. He's run 6 different companies. You'll also see in the slide deck, there's full bios that you can check out, but I'll give you the high level. So he's run 6 different companies. He's been a financial trader in Forex and futures for many years, done private investments for a very long time, for more than a decade. We've also been in the multifamily space as well. So he originally wanted to put vineyards on our family ranch, and he mentioned that on a podcast. Mason Moreland, which you see on the left-hand side of the screen, heard that podcast. He is a generational farmer. He's got a lot of viticultural background. He has his own privately funded vineyard in the state of Texas, one of the largest, 350 acres, studied in California and brought in mechanized vineyards to the state of Texas and proved it for about 6 years now. They're going into their 6th harvest. Reached out to us because he wanted to partner with us and scale this, and said, I think we can really fill the supply gap here in Texas, which we'll talk about, this unprecedented opportunity. And I knew my dad's background and experience in the financial markets, knew my experience in terms of marketing and building a brand and financial education. And so that's how we all came together. We started underwriting this back in 2018. We started syndicating it about 2 years ago and opening up vineyard blocks. We've already done block 1. This is for block number 2. Block 1 actually just got planted. As I'm recording this, we're finishing up planting, which is really exciting. It's about 286 acres of vineyards. And we are opening up the 2nd vineyard block for investors. So let's talk about returns first, because that's what matters, right? What is the actual money that's going to come out of this investment? We love wine, we love grapes, but let's talk about the returns first. So I'm going to give you a high-level overview, and then we'll go through the actual investor return model as well, and I'll explain how that works. But high level, if you look at it over a 10-year period, and you're with us for longer than 10 years, that's one of the biggest attractions to this investment, is its passive income for multiple decades. But over 10 years, just to give you a benchmark, it's 211 to 275% total return over that 10-year mark. After that 10-year mark, the vineyard will continue to cash flow, and you'll participate in the profits of harvest 16 to 21% per year for the life of the vineyard. And we'll talk about what that looks like. But over that 10-year mark, you are 3 to 4xing your money. We have an average annual cash-on-cash return of 21 to 28%. You'll see that there's some great tax benefits there as well. We'll talk about that. We are taking accredited investors only in this offering, the minimum 75. And just like most offerings that you've probably invested in, we also accept IRAs, solo 401ks, and other retirement plans as well. So let's talk about, what are you actually investing in? Let's look at the wine value chain. If you look at the very beginning of where the vines are, where they come to fruition, or they were grown in California in the nurseries, all the way to where wine is bottled and distributed to consumers on the retail side, there's a lot of steps in between. And what you're investing in with Texas Legacy Vines is the growing and harvesting of Texas wine grapes. You'll see step number 2 and 3. So when you're investing in this project, you own a piece of the business, you own a piece of the land, you own a piece of the equipment, the vines, the steel, the trellising, harvest. You're participating in all of that. But the real opportunity here in Texas, where the money can be made, the largest amount of money, is in the growing and harvesting of Texas wine grapes. And we'll talk about why that is. There's a really great opportunity here that we're excited to fill with the supply gap. So let me give you some Texas wine stats. This is Mason and Tracy standing here with the head winemaker of the largest winery in Texas. And a lot of people are like, I've never heard of Texas wine, or, Texas being a wine industry. And the reason you've never heard of that is because most of our wine is consumed in state. There's not enough grapes here in Texas to meet our current wine demand, let alone for these wineries to take a Texas wine national. So our wine is consumed here in state. but we're the 5th largest wine grape growing state in the US, and we have a $20 billion economic impact, and that has grown substantially. In 2017, the economic annual impact was 13 billion. We've grown to over 20 just since 2017. So we've got a huge wine industry here. One of the challenges that I'm going to talk to you about is supply and demand. We don't have enough wine grapes, and our farmers cannot keep up with the wine demand that continues to grow. Something else that is important to this business and this operation is, this idea of Texas pride. If you've never met an obnoxious Texan, I'll be the first. I love this state. I'm a 7th generation Texan. I've been here my whole life. And if you've never met an obnoxious Texan, you know that we love our state. We love Texas. We love all things Texas. If it's a Texas wine, we want it to be Texas grapes. And currently, the current law is that for it to be labeled, legally labeled a Texas wine, 75% of the grapes have to come from Texas. And that is a huge challenge right now for wineries because these farmers, our grape farmers, can't keep up with the wine demand. And so there's even a lot of wineries out there that don't want to label a wine a Texas wine simply because it's not 100% Texas grapes. So we anticipate they will change that law in the future, but not until we have more grapes coming on the scene. And up until this point, there's really been no farmer that can do a project at this scale and produce the amount of grapes that we're going to produce. So let's take a look at the supply and demand equation here. And I'm going to show you, I'm going to start with Texas alone on the left-hand side. We've got about 6,000 acres of vineyards in Texas, producing about 14,000 tons per year of wine grapes. The challenge is that the demand is double that. We've got more than 28,000 tons of grapes needed to meet current wine demand. And the problem is that gap continues to widen, and our grape farmers cannot keep up with that. You'll also notice over here, there's a huge gap in the central US. There's a lot of states that are making wine, but their own state can't keep up with making wine grapes to supply their own wine demand. And so what you're going to notice is that let me come back to the previous slide here about our Texas pride. We're like, well, where are the grapes coming from? Well, the grapes are coming from California. That's the largest wine grape growing state. So they're coming from California. And the challenge is there's a lot of risk and there's a lot of additional processes that have to happen once those grapes come off the vines, get in trucks and ship here to Texas. There's a lot of processes that happen, a lot of risk, a lot of additional cost in shipping. So our goal here is to fill that supply gap. And that's why we got into this business. We are so excited about that. It's this kind of unprecedented opportunity and nobody else is doing it. And here's why. When we say we have no competition, we have a very aging population of grape farmers here in Texas. They use an older, more traditional style of trellising for their grapes, which limits their ability to produce at a higher level, and it also requires a lot of hand labor. So the way they're trellised, it's called vertical shoot positioning, but it looks kind of like a hedge. And when grapes are grown in a hedge, you can't get machines in there to machine harvest, machine prune, because all the mechanisms in the machine will get tangled up inside of the hedge. So the way California grows their grapes is high wire, and it's fully mechanized. So we can get a tractor in there. We're going to show you what these tractors look like. But we can essentially run a 350-acre vineyard with 3 people and machines, where Texas farmers would probably have 80 to 100 people out in the vineyard of that size. And it's also very time-consuming to try to respond to if we need to open up the canopy to get the grapes more sun. It's going to take them a long time to do that. When it's hand labor, we can do that in a matter of a couple days with machines. So there's not any farmers that are coming out and doing this and bringing machines in. The other challenge is it's a $9 million project. So there's no way to kind of test the water and mechanize your vineyard. They would have to change their entire trellising. They would have to bring in very expensive equipment. So that's why this gap of supply in our wine grapes continues to widen. We have more wine demand coming in. We can't keep up with the grapes until Texas Legacy Vines comes on the scene. So here's our vision and our philosophy. We're not doing ultra premium wine. There might be some of you watching this that love your premium wine, and we love you for that. We have a lot of California investors as well. And one of them said, well, what if I don't like Texas wine? It's like, well, you don't have to. We're growing and harvesting wine grapes. We're not making wine. So make the money from this investment and go buy your ultra premium wine. But we want to be positioned where the money is made in the Texas wine industry. And where that money is made is producing a high quality grape at a great price for these wineries to fulfill the demand that's coming in from needing a good quality bottle of wine for dinner. If you think about a good quality bottle of wine, a dinner wine, right? A table wine from California is probably $25 a bottle. In Texas, it's 50 to 60. And the reason for that is we don't have enough grapes. So it's shooting up the cost of the grapes that's going to the wineries, and wineries can't meet that wine demand and bring the cost of that wine down. There's also a growing demographic of millennials that are starting to drink wine. Millennials don't have the same type of budget that baby boomers have. So wineries are really wanting to bring that cost of their wine down and open up new wine lines for millennials. So that's what we're targeting, is a really good quality grape for a really great price for our wineries. And how are we going to do that? Well, we're going to do that through mechanized vineyards. You'll see the mechanization of vineyard operations, the first tenet of our philosophy on the left. Economies of scale, which is 320-acre vineyard blocks. We've really found the sweet spot for the amount of equipment and tractors, and the size of harvest is going to be 320-acre blocks. And a scientific approach to fertility and management, which really becomes a lot easier when you have mechanized vineyards. So have you done this before? Yes, we've done this before for 6 years. So Cannon County Vineyards, you're seeing a picture of it right here. I just love this photo. It's just stunning. Cannon County Vineyards is a 350-acre vineyard, privately funded and owned by the Moreland family. So Mason Moreland is one of the managing partners on this project. They privately funded this vineyard, and this vineyard is kind of like the test block. Everything that they've learned and brought in from California has happened in this vineyard to refine the business plan, make all the mistakes. Unfortunately, he'll tell you that we make the mistakes in his vineyard. We've learned all the do's and don'ts, how to fine tune our operations for block 1 and block 2 as we started opening this up to investors. So it's a stunning, stunning vineyard. It's just incredible. And they're coming into their 6-year harvest. And I got a report yesterday that it's looking like it's going to be one of their biggest harvests. So we're really excited for them. But when we talk about economies of scale, when we look at high wire trellising, which is how California runs their vineyards, mechanization, we can produce a lot more grapes than the average Texas farmer, and our break-even points are substantially lower. I'm talking 20 to 30% of the cost of a normal Texas farmer, so 70% lower than the average Texas farmer for our break-evens, because we've got mechanization. We don't have that hand labor that is bogging down a lot of these Texas farmers. So they can produce 2 to 3 tons per acre. And we average 12 to 15 tons per acre. So we can very quickly fill that supply gap with each vineyard block. So each vineyard block is going to produce about 3,000 to 3,500 tons of grapes every single year to fill that supply gap. So where are these vineyards located? We get that question a lot. If you're watching this and you're from Texas, you might be thinking, oh, it's in the Hill Country, or it's in Fredericksburg, which is kind of wine country in Texas. And about 80% of the grapes that make those wines in Fredericksburg come from the area where we are growing grapes, which is called the High Plains AVA. And the High Plains AVA stands for American Viticultural Area, is located north of Lubbock, so like northwest Texas, but it is the prime condition for growing grapes. And a lot of people will ask, well, isn't it really hot in Texas? Like, is it a good climate for growing grapes? And it is, because it's really hot. So we do a lot of reds. Each vineyard block will have probably 12 to 14 different varietals planted within that 320-acre vineyard. But we grow a lot of reds because reds do really well here with the heat. And they sell for a higher price point. So we love the reds. We love being able to sell those at a higher price point to our wineries. We've got great growing conditions. We have cool nights. We've got really hot days. We don't have humidity up there. It's very dry, which means we don't have to spray a lot of fungicides. We don't have to worry about fungus and mold, and a lot of the challenges that wineries deal with in the central area of Texas. But those wineries will buy grapes from us, ship their trucks up to the High Plains AVA, pick those grapes up, take them back down to the Hill Country where it's beautiful and you have all the resorts and the wineries, and they'll make the wine there. But this is the ideal place for growing grapes in Texas. So let's talk about vineyard development. What does that look like? Our operational plan is a 320-acre vineyard. 290 of those acres are planted, and the extra acreage is set aside for barns and turn rows for our equipment. In this vineyard block, it's a very unique situation where we've decided to purchase block 3's land. Okay, so this is vineyard block number 2. We are going to purchase block 3's land inside of this offering, and then we're going to eventually sell it next year to block 3. And the reason we're doing that is to provide a return to our investors a little bit earlier on, because it takes some time to get to a full harvest. So give them a good return. And then we're also locking in our land costs. And that's a big thing for us, is making sure that we're getting a really good land cost and buying that land in advance. So I'll explain how that affects the returns. But you'll notice here at the very bottom that planting and operating a vineyard requires very specific infrastructure. So irrigation systems, trellis systems, tractors, the Poulenc tractor, which comes from France. I'll show you what that looks like here in a minute. But block 1 has just been planted, and it was about a month-long process, about 236,000 individual vines that went in the ground, and the same amount of T-posts and vine shelters. And it's a big production to install a vineyard. But we're so excited for that for block 2. We've already got the land for block 2, and we are starting land prep. Irrigation is going in right now, and we will be prepping the land for planting in May of 2024. So let's take a look at the vineyard growth timeline. These are not annual crops. You don't plant vines every single year and they produce grapes. You plant vines once and they will last for 25 years. Some vineyards you'll see have 40 to 50-year-old vines. But at the level of production that we're pushing these vines to, they will last about 25 years. You'll notice here that you typically will not see fruit on the vines until year 3. Our full harvest is considered in year 5. And my dad's not on here right now, but he's the king of dad jokes. And one of his favorites is to say, yes, you've got to wait for full harvest and for those returns to kick in. But I promise you the juice is worth the squeeze. So hopefully that gave you a little bit of a laugh, but it is. You'll see the returns and it is worth the wait. So here's the vineyard development timeline. Fall of last year, we acquired the land. We ordered the vines. We do a lot of due diligence in how we order the vines based on the soil types. We dig huge soil pits across the property, and that determines the 12 to 14 varietals that we will plant. We've done land prep. Irrigation is getting installed right now. We'll put a cover crop out on that land this fall just to keep the soil in place. And then those vines are going to get delivered from the nurseries in California in May of next year, and we will start the install, which is really exciting. And we have a lot of great pictures and photos that we share with investors as the installation's happening. And we have some investors that want to come out and see it all. So if you're an investor in this, you're more than welcome to come hang out and check out the install. It's quite the production. It's a lot of fun to watch. So I mentioned over here that one of the tenets of our philosophy was mechanization of vineyard operations, big tractors and machines that can harvest for us and prune for us. And here's what those machines look like. Hopefully you can see on this picture on the right how big this thing actually is. You see, this is my dad standing over here in his cowboy hat, and you see Mason. This is kind of a deceiving picture. It's even, I was taking it from the bottom shooting up, so it's even way taller than Mason. This thing is huge. It comes over from France, believe it or not. It's called a Poulenc tractor. It's about a $700,000 piece of equipment when you account for all the implements, but it will harvest for us. It will prune for us. It will spray. There are so many things that we can do with this tractor, which is why we're able to manage such a large vineyard with just 3 people. And because we don't have all those labor costs, we have a lot more returns for our investors. So I want you to take a look at this harvester. There we go. The video is playing. And Colton, who's one of our guys that runs our vineyards, loves to run the tractor. You can see how quickly he's harvesting compared to a hand harvesting crew that we did just to show you an example. This is out in Cannon County Vineyards, which is the Moreland family's privately funded vineyard. But he is harvesting so much faster than the hand crew that you can start to see here on the left-hand side of the screen. And another reason that wineries love our grapes and our harvesters is because this harvester gets rid of a lot of the plant material. So you're not getting leaves and sticks, you're just getting grapes when he's harvesting. So this piece of equipment is incredible. We have one of these on every single vineyard block, and it really allows us to harvest so much faster than if we had a hand crew out there. So let's talk about selling the grapes. That's how we make money, right? So let's look at grape price trends first before I show you the investor return model. So the grape price trends in Texas, I want you to, if you see this little star line right here, this represents $1,500 a ton. And grape prices have been above $1,500 per ton since 2010, so 13 years. And this is 2020. We are hovering closer to $1,900 a ton. Mason's family is contracting fruit for $2,200 a ton. We actually already have wineries reaching out for block one vineyard that just got installed, and they are contracting fruit for 3 to 4 years away at $1,700 a ton. So grape prices have been trending well above $1,500 a ton for more than a decade, and that is our pro forma price, even though we're currently contracting grapes at $1,700 a ton for block one. So let's take a look at the return model, because that grape price is what's going to largely determine the returns. You'll notice here that we have two different return pro formas. In the slide deck, you'll have the year by year for $1,800 a ton. I'm just going to show you in this video the $1,500 per ton model. But you'll notice here, this is where the return range comes in of 211% to 275%. That's going to be based on that $1,800 per ton. This is based on $1,500. And you've got a projected cash on cash of 21 to 28%. And that is coming from harvest every single year. We harvest typically in August and September, sometimes in October, depending on how much rain we've gotten. But those returns come in once per year after harvest. So let's take a look at what it looks like on a year-by-year basis. So you'll notice here that the first year does not have any returns in it because that's the installation of the vineyard year. The second year, you'll see the 6.3% return. That is coming from selling block 3, right? So we're acquiring the land for block 3 and we're selling it to the block 3 offering at their pro forma price. So we can get a good return for our block 2 investors, lock in our land prices. There's no return in year 3. Year 4 is minimal. We've got harvest at that point. We're selling some of that fruit, but you'll notice year 5 is really when returns kick in. We're in full harvest at that point. We're producing about 12 tons per acre, and we really hold the vines back the first 4 years so we can build a really strong root system and a really strong wood stock, because this is going to produce for 25 years. So we want to make sure we have a really strong canopy and wood stock to hold that fruit that's going to be produced. So you'll notice 33%, 32%. I'll tell you why it goes down as we get into this later, but in short, it's our insurance cost that's going up to protect our investment and protect our investors. So I'll explain how that works here in a bit. You'll notice in year 8, there is a refinance. So in year 8, as we refinance and return your capital, we go from a 70-30 split to a 50-50 split once we return your capital. There is a 100% return on your investment by year 7. If we do that refinance in year 8, you'll notice that a lot more comes back, $174,000 based on a $100,000 investment. And then after that, after the refinance, the vineyard will cash flow about 16% per year for the life of the vineyard, all the way through year 22, 23, 24. As we start getting towards the end of that kind of life cycle of that vineyard, we've got a contingency fund to replant the vineyard that we're holding back profits from harvest. So all of these returns are net of what we're holding back from harvest to put into a contingency fund. And I'll explain what that means here in just a sec. But I want to draw your attention down here to the right. It says if we do not refinance in year 8, our pro forma returns are about 21.8% per year for the life of the vineyard. We don't have to refinance. We would love to, because we'd love to pull out some equity, return it to you as an investor, but we don't have to. So our refinance pro forma is at 8%. If we're anywhere above that in the interest rate environment, we will not refinance, nor do we have to execute our business plan. This will still cash flow very well for the life of the vineyard. So you'll see a couple notes down here. Note 4 says replant contingency fund is worth $5.3 million at year 20 from annual profit holdback. So what that means is as some of these vines start to give out, and they'll get tired around years 23, 24, we might have, say, 40 acres of Cabernet Sauvignon that normally produces, say, 12 tons an acre, and in the year 23 harvest, it only produces 8. Well, we know it's getting tired. So we're going to pull those 60 acres out or those 40 acres out of that specific varietal, and we've already got a contingency fund to replant that portion of the vineyard. So we will strategically replant those full 290 acres over the years to, so we're not wiping the whole vineyard out at once, but we've got cash set aside for that. We're not doing capital calls for that. So you could be in this with us for 50 years. That's the reality, which we have a lot of investors that are thinking about for their kids or their grandkids. But we're really excited about this. Mason and I are young. Some days I don't feel so young, but I'm 37. Mason's in his early 30s, and we've both decided we're definitely replanting this. That's why we called it Texas Legacy Vines. We want it to provide cash flow for our investors for decades to come. So let's talk about the tax benefits. In year 1, we've got a total tax benefit Well, total tax benefit separate from year one is about 68%. We have a very specialized cost segregation firm that we've brought on board that does a lot of vineyards in Napa and in Oregon as well. And so they are running cost segregation for us. We're anticipating about a 42% year one bonus for the vineyard. We can depreciate the steel, the vines, the equipment. We can actually depreciate the aquifer that the land sits on top of, which is really exciting. Like I mentioned before, distributions will only happen once per year. And if you are a strategic passive investor and you know how to play the tax game, we will do our best to let you know what we think harvest will be around June or July. As we start hanging fruit, we'll get a good idea of what those returns could look like. So you can plan ahead and know, okay, I'm going to have this much money coming in after harvest to then deploy or invest in something else based on your own tax strategy. Investor communication happens once per month. We don't believe in boring reports. We like to do a webinar. So we do a webinar called Through the Grapevine. Everybody shows up with wine. We have a wonderful time, but we talk about, hey, here's what's happening at each of our vineyard blocks. Here's what's going on in the industry with California industry updates, Texas wine updates. We show you what's happening at Cannon County, which is the Moreland family's privately funded vineyard. And we teach you about the grape growing process. So we really enjoy those webinars, and then we send those recordings out with notes and P&Ls and financials and all those things. But we like to see you. If you're an investor of ours, we want to see you. So we hope you join us once per month. The financing on this, I'm going to show you high level. There's a lot more slides within the investor deck of use of funds. Where's that capital going? How does the exact loan work? But I'm going to give you the high level here. So the total project size for each vineyard block is about 9 million. For block 2, it is 9 million. We have a very low LTV. That's been one of the biggest attractions for most investors in this project, is we are not taking on a lot of debt. So out of that $9 million project, we are only taking on about $3.5 million of debt. And of that $3.5 million of debt, only 65% of it is leverage. So we have a 65% LTV, 6.6% pro forma interest rate. And the really cool thing about this is it operates like a credit line. So, you know, we're 2 years into vineyard block number 1. We haven't even drawn on that loan yet. So we're not paying any interest on that. So we're not experiencing the volatility that a lot of other investments are in this interest rate environment, simply because we are low LTV and we're not taking on a lot of debt in the first place. But it is recourse debt for lead sponsors, not for you as a passive investor. People ask, do you believe in this project? Yes, we do. We're signing on $3.5 million in loans for every single vineyard block, personally signing on that debt. So we are recourse loan as lead sponsors. Like I mentioned before, our refinance model is 8%. If we're anywhere above that, which I hope we're not, but we never know, if we're anywhere above that, we won't refinance the vineyard. It'll cash flow 21.8% per year for the life of the vineyard. If we are, we will refinance. We'll get you some great cash out. The land strategy, like I mentioned before, is we're purchasing more land than we need, because we're going to flip that from block 2 and sell it to block 3 next year. One other question that we get sometimes is, how many vineyard blocks are you doing? And if, like I mentioned before, we're going to produce about 3,000 to 3,500 tons of grapes per vineyard block per year. We will fill the supply gap in Texas in about 4 blocks of vineyards. We've already done number 1. Number 1 is installed and planted. That one's closed out. We are closing out number 2 soon. We are already more than 65% funded for block 2. We will open up block 3 probably in August or September, and then block 4 will happen in 2024. And then we'll reassess and see where things are at. The demand continues to grow. We've got California wineries opening up tasting rooms in Texas, buying up vineyards for their own tasting rooms, pulling grapes out of the Texas grape supply, which is further compounding the challenge of wineries here not having enough grapes. So we have a feeling, based on our relationships with our wineries, we're already contracting fruit 4 years out. Mason Moreland's vineyard, our managing partner of this project, for his vineyard is partnered with the largest wineries in Texas. And they have shared that a lot of their future plans are based on what we're bringing to the table and this amount of grapes, and really filling that supply gap. So there's a lot of great constituents involved. We're very excited about the future of this, but we're planning for 4 vineyard blocks, maybe 5, but this is not going to continue on forever, which is why if you think this is a good fit for you, we hope that you would reach out, get your questions answered, and get invested. We would absolutely love to have you a part of this project. I mentioned this before. I'm going to highlight this really quickly, our materials cost. We've way overestimated the cost of materials when we initially underwrote this. We assumed a 1.75 increase in the cost of materials. We're not seeing any increase at all. So we have got a lot of capital in there as a hedge because we're super conservative in our materials cost. Also with our refinance interest rate, we've been very conservative in that as well. And I mentioned the contingency fund before. It'll be worth about 5.3 to 6.7 million by year 20 for us to replant the vineyard. So we will not be doing a capital call asking you for more money. We will have plenty of money from harvest every single year. One of the other questions that I get that we get a lot is what about, weather, and what about bugs and insects and, disease? How does that, how do you manage that when it comes to your vineyard? Well, we are really excited to tell you that we have insurance. I wish we had this. We've done other projects and private money investments in commercial real estate. I wish we had insurance in terms of occupancy or other factors that dramatically affect your returns. We have it in farming. A lot of vineyards don't have it because they're not a large enough operation to be able to afford the insurance. But because of our scale, the size of this project, we're bringing in so much from harvest every year that we can easily write a $600,000 to $800,000 check when we're at full harvest. I know it says $200,000 to $600,000 here. This is probably for years 1 through 4. When we get to years 5 and on, our insurance cost could be $600,000 to $800,000 per year. We can easily cover that with our profits from harvest. And what that does is it gives us peace of mind, gives our investors peace of mind that if something catastrophic were to happen in terms of weather, we don't really get a lot of disease out in the high plains just because of it's being super dry. We have root stocks on our vines that are disease resistant. We don't get a lot of insects out there because we don't have a lot of humidity, but we do get weather. We get hailstorms out in the high plains. So if something catastrophic were to happen and were to damage our harvest for that year, our insurance company would write us a check for 75% of the average yield at the contract price. So 75% of our projected harvest, we would get an insurance check for, distribute that to our investors. So we do have crop insurance, which is really exciting. Our winery contacts also like the fact that our vineyard blocks are spread out. They're about 30 to 45-minute drive from vineyard block number 1 to number 2 to Cannon County. We'll spread out block 3 and 4 because it does give them a little bit more peace of mind that if we did have something were to happen at one of our vineyard blocks, we could still maintain our winery relationship and those contacts by supplying grapes to them from another vineyard block. Okay, that's it. My goal is to keep this around 30 minutes. We're close to it. If you have got questions, I want you to contact your lead sponsor. We've got a couple of partners in this. We're so excited to meet you, to see you in upcoming Through the Grapevine webinars. Those are currently going on. So as soon as you invest, you will be invited to that. But contact your lead sponsor, get access to your investor portal. You will see the offering docs in there. You'll see the wiring instructions.